Welcome to another video where we will review Bitcoin and the entire cryptocurrency market. We are in August 2024 and most people are afraid. They don't know what is gonna happen with crypto. They don't know when to expect a change because we've been consolidating for a long time. About 5 months, price has been going up and down without a clear direction. In either case, I will talk about these following points: how to trade this cycle, DCA, done right and wrong, so that you know how to do it properly, what to expect, and when and where are we in this market. Now, the reason I make this video is because, like I said, there's a lot of uncertainty. People don't know if we are going to go lower or if we are going to make a new high or not. So I think it's great to bring some clarity to it and especially teach people how to trade this if they want to trade Bitcoin in a way where it's safe and allows them to make the most money. So let's get right into it. So this is the chart for Bitcoin as you are familiar with, and I want to start talking about this trend that we've been stuck in for 5 months, since March until August, which is right now. That is about 5 months of up and down movement, meaning price is not clear in where to go. And why are we in this situation? Well, you could say that because we took this high using smart money concepts, we extracted the liquidity. People that were long on this, people that entered long in any of these areas, exited when the high was taken. And people that were trapped, meaning people that tried to sell their Bitcoin but didn't, people that held. I know some people that just bought it at the top and left it there. They didn't do anything for 2 years or so. And those people will want to exit eventually. Most of them will say, okay, look, I recovered my money. I don't want to risk it. I've been through a lot of emotions, because when people hold and invest into crypto, they feel a certain way. They don't want to risk it. They don't want to, get their money. They don't want to make their money stay stuck in that position. So if you use classical, let's see how to trade this where we are right now. Let's see how to trade this. If you use classical trading, support and resistance, you may see a channel here or a consolidation, which means price is expected to continue going up and down. This is only for people that trade classical trading, technical analysis. And what they do is they usually draw support and resistance areas, and they expect price to respect those areas until they break, and then they expect them to reverse. So for instance, price is going up and down. We expect to bounce around in this area. We don't know when it will end, but eventually it will. So if you are a classical trader, if you trade like this, or if you want to trade like this, what you would do is you would buy when price hits the line, meaning if price goes here, you will buy at this point and then benefit from all the upside that you expect until it hits this point or this point, somewhere around here. That would be a trade for you. You will make a good amount of money there if you know how to execute it and set up your stop losses and all that. And same thing here. If you see that price is bouncing, hitting this top area, this resistance, you go and sell short until this area is reached, somewhere around here. That is good and fine, but you need to be familiar with the strategy. You need to test it and see it 100 times and see when it works, when it doesn't, and how to behave on every different scenario. Now, all the people that, and another point is that when price breaks from this level, meaning it goes above this resistance, classical traders will expect price to hold, meaning once it gets above this line, we expect it to act as resistance. As support. Resistance turns support. So the next time it hits, they buy, expecting it to act as support and continue buying until they see fit. Same thing here. Once price breaks down, they expect this support to act as resistance, meaning price will not break it because it went down and there's a difficulty there to continue up. So every time it hits this, it enters this area, that's when they sell short until further targets, like this one. In my opinion, though, I will keep this into consideration, but that's not how I trade. I personally trade smart money or ICT concepts where you look for liquidity and see where price may be headed. In this case, liquidity was here at this previous all-time high, and once we reached it, once price took over, exceeded that all-time high, that's when we know, okay, a lot of traders are exiting. People that were long in profits, people that were short, and well, short people that were holding since this area are gonna exit. Most of them, some will keep, but in short, a lot of people will move and sell their Bitcoin in profits and, you know, in goodwill. Only those that know how to trade. Of course, there's all the people that have different strategies. But yeah, this is exactly what happened. Price took over this all-time high from 2021, and we saw it going down. At this point, you could trade it and say, okay, there's a huge liquidity sweep. We're gonna sell short, and we are gonna set up a stop loss on this high. When do you enter there? That's up to you. But if you were trading ICT or smart money concepts, you would set up your stop loss right there and you would go short based on the fact that this high was consumed. And your targets would be somewhere where you choose. And that's how I like to trade. In fact, whenever we hit this and we started to see some consolidation, I knew that price was not gonna continue bullish for a while. And it's normal because after the halving, which was this year, 2024, we expect price to go up, but then stay in that area until the end of the year of 2024 or beginning of 2025, when we see another leg up based on previous analysis of previous halvings. So what happened here is, like I said, all these people that were long, they exited when this clear target was hit. So right now, where we at is we're simply seeing a consolidation, and we expect price to stay undecisive. But of course, if you trade ICT or smart money concepts, you will be familiar with a breaker concept, which is this line, which means it's a high, a previous high that acts as support. And a breaker is simply price exceeds this area, then bounces on top of it and eventually overcomes the previous high. Another point is that there is a ton of liquidity in this area. A lot of people were short on this area. So anytime if price exceeds this area, all the people that went short will hit their stop losses, and a lot of money will be released into the market, causing a strong push up. So price will be attracted to that area because there is liquidity, and the moment it hits, we expect a push up, and of course eventually it will correct itself until it consolidates. So those are the main ways: the smart money and the classical resistance or retail trading, if you will. But if you don't know how to trade, if you're not familiar with how to trade this, the best thing that I recommend you to do is to do dollar cost average. This is only if you believe in crypto. If you are like, okay, I'm not sure about crypto, I'm not familiar with how it works, I don't really understand the technology, I don't know if it will continue being here in 10 or 5 years, then you shouldn't dollar cost average, because this strategy only works when you believe in the long-term potential of crypto. Meaning, since the supply of Bitcoin is limited and every time is being reduced, the emissions are being reduced, the demand is increasing based on the utility and other factors. People that believe that Bitcoin will continue to go up based on the fact that dollar dollars are being created, they are being diluted, and people are putting it into crypto, which is like digital gold because it's limited. But I could go on forever. And the main point is that dollar cost average is a great strategy, also known as DCA, for people that don't know how to trade or don't want to be in the markets or don't want to risk it. And the way it works is simply to buy Bitcoin every time you hit your paycheck. Every time you make some money from your business or your job, you buy. Let's say you're making $3,000 a month, $3,000, which is not much, but you want to dollar cost average, you want to make money from crypto. In fact, those people that did dollar cost average for all this time made a lot of money, especially if you started here. If you started dollar cost averaging, you would have made a lot of money there on the way up. But anyway, if someone is making $3,000 a month, what I recommend you is to spend at most 10% of the money you make into crypto if you want to dollar cost average at most. So that would be $300 buying Bitcoin or any other currency you feel safe, like Ethereum, maybe Solana, Litecoin, any coin that you feel is going to be here for a long time and that has a strong momentum. Now, some people will go crazy and will put 100. Let's say they earned $3,000, they will put $1,500 into crypto. In my opinion, that is a terrible decision, not because, well, it may pay off if you are able to hold, but most people will not be able to just put the money away and leave it there until they hit their targets. And they will start to feel emotional. If you put half of your income into crypto, you are gonna be very limited in your capital. You're gonna feel the fact that your money is being locked up. You don't have access to it, and you will feel frustrated. You will start checking the markets every day. Every dip in price will make you emotional. You will pay too much attention to crypto. If you're dollar cost averaging, you don't want to pay attention to crypto. You just want to buy, and whenever it's time to sell, based on your analysis, then is when you check the markets. But if you are doing DCA properly, you don't check the markets. You just buy at whatever price is at the moment you have your money. And you don't want to invest that much. 50% of your income is just way too much because it will make you emotional. Like I said, it will result in bad trading. It will make you see, if you dollar cost average here, you will see a dip of, $10,000 or $20,000 in Bitcoin, which is significant. And you will start to feel emotional. You will start doubting crypto, and it will make everything bad. So I recommend you to put 10% at most. As you have, 10%. If you are, if you need that money, you will put 5%, $150. It may not be much, but that money will accumulate. And eventually, if you believe Bitcoin will go to 100,000 or so, that will pay off big time. In fact, that's what Saylor did. Michael Saylor, he is probably one of the largest holders of Bitcoin, and all he does is buy crypto. Doesn't matter if it's bullish or bearish, all he does is buy, resulting in the fact that he bought at about 30K, meaning he got all hundreds of thousands of Bitcoin at 3,000. This is awful. At 300,000 on average. You know how much money that is? If you were able to buy $1 billion in crypto for $30,000 and you are here in the markets, you will be very happy because you would made at least double of your money. So that's how dollar cost averaging works. As long as you expect price to continue to grow, you know that you are safe. And the best way to do it is just to use an automated service like Binance or KuCoin, maybe Nex, or maybe Kraken, where you put your money and you set up an automatic dollar cost average which buys crypto every week or every month, depending on how you set it up. But you don't want to be the one executing the trades. You want to just put the money in and they're executed automatically. There are a lot of tools to do that. That's what I recommend you to do. Now, besides that, it's the wrong way would be to invest too much and to pay attention to the market. The right way is to invest at most 10% and to forget it by setting up automated tools that buy for you. Okay, and this is what I recommend for people that don't know how to trade or want to be into crypto, want to benefit from the gains without having to risk it through manual trading or paying attention to the markets. It's perfect for most people, in fact. We've seen how to trade the cycle, how to do DCA right and the wrong way, and what to expect and when. So again, we are in the halving season, which started in 2024. And from our previous analysis, we know that the top of the markets are hit at the end of the year. So in about 2 years since the halving is when we expect the top to be hit. Right now we are in the middle of 2024. So we expect the top to be hit at the end of 2025, in December 25 or so. So it's a long time from here to here. There's a lot of things that could happen. In my opinion, it will consolidate, it will go down, up, but it won't make much of a movement until we hit that time, and at which point we'll hit easily 100,000. In my opinion, this is just my opinion. I'm not a professional, but that's what I've seen from my analysis. And yes, and after 1 year, yes, this is exactly what happened after 1 year. This is the previous cycle. At the end of the year or so, so if it started here in 2020, it went up at the end of 2020. We've seen a huge move. Then again in mid 2021, which will be mid 2025, we will see a potential big high here being formed, and then a drop in April or mid 2021. This is what we can expect from previous cycles, and we've seen it in other videos, and it's quite reliable. We can say that, okay, if we study the old patterns, we will have a clear idea of what to expect, because they are pretty reliable based on the fact that they are long-term cycles. These are years that are developing. So where are we in this market? Right now we are in consolidation. Well, this is a very weak consolidation, meaning it's not pushing price strongly in one direction. It's just moving up and down with a bit of a bearishness to it. But the fact that there's liquidity here means price is clearly gonna target that eventually, maybe at this point when the breaker is hit, or maybe it wants to go even deeper into it, which is this equal lows at 25,000. That would surprise me, yes, because it's a very low point, and I don't think it will hit that area, because it will be a significant move that could reverse the entire market, and I don't think it will get that far. But yes, we can expect corrections that could go until this area, which is about 40,000 in Bitcoin. But eventually we will take this high right here, all these 3 highs. Those are clear targets based on liquidity analysis. When will we hit those targets? We don't know, but we are certain that we are gonna expect more and more consolidations. Until price makes a clear break, we don't act on it. We just watch dollar cost average and expect things to happen. If anything, we only act on this breaker or when there is a clear shift in market structure, which is then going to indicate us when we enter. Now, this is only for traders. If you're not a trader, you don't want to pay too much attention, just dollar cost average. And forget it until the end of the next year, so 2026, in January, December 2025, or January 2026. That's when you close your positions. All the money you've accumulated, you release it into the market when everybody is claiming to be happy. Now, in terms of sentiment analysis, which is a big thing, most people don't pay attention to it, but sentiment analysis indicates us where we are in the market. In terms of sentiment, we are not bullish or bearish. In fact, most people are, right now, I would say they're bearish, because consolidation creates doubt. People are not certain where it goes, especially in a consolidation like this. A down consolidation indicates, okay, people expect this to continue up in this area, but then they slowly feel their dreams fade, and some people exit the markets, others don't. But in short, sentiment analysis tells us that, okay, we are not near the top of the market, because if we were at the top of the market, if we were completely on the all-time high, which some people think that, okay, we are done here, this is the all-time high for this cycle. Some people think that, and probably they're right, or probably they're wrong, I don't know. But in my opinion, sentiment analysis tells us that we are not there, because if we were at the top, we were seeing post after post after post of positive news of how crypto is changing their life, of how much money they made. We will see screenshots of people making millions, of people retiring their parents, people buying homes, you know, all around positive after positive news, and people being greedy, wanting more of crypto. And yeah, we don't see that right now. We only see some good news, but overall in the last months or weeks, we've seen bad news or no news at all, basically. They're saying that DeFi usage is down. It's a low, a 3-year low. We've seen news of WBTC, wrapped BTC, being in conflict because of some changes, which are bad news. These are bad news that you don't want to see in a cycle top. If we were here, remember here at the bottom, most people were just simply ignoring crypto. Whenever we hit this area, people were simply forgot about crypto. Most people forgot, but I made a video on it and I called it and I said, okay, this is likely the bottom of this bearish. And I called it and I made $5,000 from it, because it was clear based on the signs, the time, position, and sentiment indicated that that was the bottom. And right here, if we take a look at the time, it's right in the middle of the cycle. We are nowhere done. We don't know if time is not indicating us that we are done. Sentiment is also neutral at best or bearish at worst, and that means we are not done. And the place, well, you could argue that, okay, we hit this top, so we may be done. But if one thing I've learned is that crypto continues to surprise us. We don't see this type of, moves that make sense. You see, like for instance here, this is the previous high. People could argue that they were done when we hit this, when we consumed this top, but then it made a massive move that was 3 times as big as the previous high. So it's insane, it's pretty big. So you can, if we are being confident, it could be a double or a triple of the current all-time high, meaning we could double or triple. If we take a look at this range and we duplicate that could be the high, or if we triplicate that could be the high. 200,000, 100,000, those would be the targets. And right now, they seem far away. In fact, when you zoom at the chart, you don't see those targets. Most people just are not aware of them because of the consolidation that we've seen. In short, price, the time is not indicating of the bullish cycle to be done. Are we done with the bullish movement? And time tells us we are not done, sentiment tells us we are not done, and the price action doesn't tell us anything right now, because if we were done, we would see a massive correction quick. You see, tops are sharp. They're not like this. They're not consolidating, maybe going down slow. Those are not tops. This is known as a retracement, a consolidation or retracement. When a high is taken, price slowly comes back to recover, and then it continues if the intention is to continue up. But if we really hit the top, we will see a spike, giving people little time to exit. See what I said? If we were really done, those that control the markets would give us very little time to exit. In fact, here the top was created, and less than a week later, the top was done, and we were very much lower than before. So this high was 1 or 2 days. And here you could argue that the high price is close to the high. If we were at the top, it would be like this, dropping quickly, like we've seen here. You see a sharp drop in little time versus a slow drop, which indicates, okay, we are not done here. This is used by market makers to buy, to create fear, to get people out of their positions so that they can buy again when prices are low. The more time they give, the more it drops, because there is no news, there's nothing going on, and people they need to use their money, so they sell their crypto, and price slowly goes down. But if the market makers were exiting their positions, we will see a sharp drop followed by a sharp drop, because they sell billions of dollars at a time. So far we haven't seen that yet. All we see is all these small pushes up. Those are them accumulating. Market makers, those that move the market. Okay, hope that's clear. So let me remind you what we've seen in this video. We've seen how to trade this cycle either by using support and resistance in this area. When we see a breakout, we trade on the reverse, meaning if we break a resistance, we consider it as a support and we continue to buy until we see our reverse. Or if we break a support, we continue to sell, expecting the support to act as resistance. If we are trading smart money concepts, we would see the liquidity and again mark the liquidity again, and it will tell us, okay, because this liquidity was taken, we expect this retracement. But because this more liquidity was taken, all these small highs, these are liquidity positions, people that were short, all that will be a target for price, meaning price will want to go here eventually. We don't know where, but smart money tells us that, okay, this is a breaker and it could act on it. And besides, if you go deeper into smart money, you will see that this is a fair value gap, an imbalance. And as long as this fair value gap is respected, price will be bullish. If this fair value gap is taken, that it will act as resistance and price will continue to drop. But it depends on how deep you are into trading. Those concepts may not apply to you if you're not a trader. In any case, we've seen how to trade the cycle, how to do DCA right and wrong. Again, risk only 10% of your earnings per month. Buy without seeing the chart, because the moment you pay attention to the chart or the price of Bitcoin, that's when you begin to make mistakes, because the price of Bitcoin is very volatile. We see all these sharp drops that will make you to sell. That will make you feel a certain way and will make you want to sell. If you buy here and you see price dropping so sharply, it's intended to shake people out, to get them out of their positions. So if you DCA, you don't want to pay attention to the price. You don't want to look at the charts. You don't even want to look at the news. Just buy until your date is hit. In my case, it will be end of 2025 or end of 2025. That will be the date, the best date. Of course, there are other intermediary periods, like this high was created in the middle of 2025, which would be 2025 for us, in the middle of it, and then at the end. So these are the two main points: middle of the next year and end of the next year, based on the fact that we know how Bitcoin acts on the cycles, on the 4-year cycles. Then what to expect, and when we've seen that, okay, price, we expect it to continue up based on our analysis of sentiment, time, and place, and price or place, however you want to call it. We've seen that, okay, we are not done with the bullishness because the sentiment is neutral or bearish. Price hasn't really broken up the high. It's taken the previous high, but it was a very weak high, if you will. So we may hit a much bigger high if we see the US government print billions of dollars or trillions of dollars like they did before with COVID. And time is not there. We haven't reached the end of the 4-year cycle or of the halving. Where we are in this market is simply, we're expecting consolidation. We are pretty much in the middle. There's nothing much going on here. It's just expecting to bounce around. If you want to go deeper into it, you would look at the previous cycle and say, okay, at this specific date, this is January 2021, this will be January 2025. That's when we expect a sharp high, create a new high. Then we expect a correction, and if you can go deep into it based on a study of the previous cycles, but where we at currently is just in the middle of nowhere. We are just consolidating, and all we do is DCA or trade your patterns, which could be a breaker, which could be a resistance or support. Whatever you do, you simply apply that on a shorter time frame. So that's it. These are the points that I wanted to discuss in this video, and I think it was very helpful. You learned how to behave on this market, how to trade it, what to do next, and yeah, that should be it. Hope you like this video. Make sure to subscribe, join my email list in the description, join my group MEVDAO, and let me know in the comments what video suggestions you want me to talk about, what other topics are interesting to you, and how you plan to trade the Bitcoin on this bullish market. Or are we in a bullish market? What do you think? Are we done already? Let me know your opinions. See you soon.